Skyping with us now from Brisbane is Ashley Burtenshaw of Gryphon Capital Investments, who have just listed Gryphon Capital Income Trust. Ashley, thanks very much for your time today.
No problem at all, Danielle.
Can you tell us a bit about Gryphon, please? About your new listing and the strategy. What sets you guys apart?
Yes, so Gryphon Capital is an independent specialist fixed income investment manager. Our expertise, or our specialty, is in the secured credit markets, which spans across two continents, being Australia and Europe. The asset classes that we focus on are the RMBS and the ABS markets. And it's with this focus in these assets is where we believe we have a competitive edge, and that competitive edge is in our data excellence. The GCIT team spun out of Columbia Threadneedle back in 2014, and Columbia Threadneedle is a very large asset manager of circa $500 billion. When we've spun out with their full support, and still to today are we still managing their money on their behalf. Back to GCI, we've now just passed our 4th anniversary, which happened in May 2018, which is just last month. And we now manage just in excess of $1.9 billion. So the strategy that we are bringing to market for the retail investors, or for all investors, I should say, is for the Gryphon Capital Income Trust is to generate a high and stable monthly income stream for investors. This has to be consistent with long-term preservation of their capital. This is going to be derived from a portfolio of bonds, and those bonds are going to be in the universe of our excellence, or our specialty being RMBS and ABS bonds.
And it seems that the market is very interested in what you have to offer, because you've just had a very successful IPO, raising $175.3 million. Can you give us a bit more information about why you chose to float on the ASX and a bit about the register?
The reason why we decided to float was really we wanted to diversify our client base. And by diversifying our client base, we targeted the non-institutional client base or clients. And when you target the non-institutional clients, we wanted to understand what is the best practice for those investors, i.e., how is the best place to invest. And when we did our research, we decided that the best place to invest was in the listed marketplace rather than the unlisted marketplace. What happens in the unlisted marketplace is it can be somewhat opaque, but also can be in really stressful times, difficult times, can be problematic or challenging to when you want to redeem an investment to get your money back. Within the listed space, what we've realised is there's a high threshold of governance around the listed product space, but also it promotes transparency and also liquidity. And that liquidity is important in times of stress to be able to buy and sell your investment if that's what's required. The investment that we're bringing to the market, to the listed marketplace, is an income stream of cash rate plus 3.5%. So given the amount of the return we're looking to provide investors, you understand that at times the market can be difficult because the returns that we're looking to target far exceed the risk-free rate. And so therefore we need to best represent the investors, and we believe the listed marketplace is the best place to represent investors.
And now let's talk a little bit more in detail about your product and its positioning. You've mentioned their values such as low risk, income producing, fixed income with capital stability. Can you tell us more about the asset class and indeed how the market has been receiving it?
The asset class is quite a unique asset class, and it's not that well represented in the general public. And it's an asset class but the asset class has had very, very successful performance in terms of how those assets have performed in the markets. And if you take the asset, for argument's sake, which is predominantly, which we'll be investing in, be it the RMBS market, these assets have performed exceptionally over a long period of time. Since the inception of the RMBS market in Australia, no investor has ever suffered a capital loss. And so these types of traits is what we believe give the investor the best chance to able to extract this income from their investments. But not just looking back in history, but also moving forward, we need to understand how these investments will withstand any types of highly improbable or high stressful event in Australia. And from our analysis, what we've worked out is when we look to stress these securities under a very highly improbable scenario, be it the average house price falling by up to 40% in 1 year, these securities are predicted to repay their capital. So the history of the security and its performance to date, and also secondly, with its projection of its ability to withstand highly stressful events, we believe gives the investor the best outcome to generate these types of returns.
And let's talk a little bit about the wider market, if you would. It has been quite volatile recently. What are your projections there?
In our view, we've held this view for some time, is that investors need to expect the unexpected. And what we mean by that is there's a lot of analysis and there's a lot of views regarding what will happen under the Treasury rates going through 3%. What about all the geopolitical risk with North Korea? Let's also talk about the fear gauge, VIX, and what does that represent for investors. And what we've worked at the investment committee, our view really is that it's very hard to predict, but also secondly to time. And therefore, given that, that backdrop, we believe that investors should be sticking to their knitting. Stay close to home. Do not stress for yield. If you stretch for yield in this environment, I think you're going to be, putting yourself in a position that you'll find uncomfortable. And when you get into periods of volatility, you don't want to feel uncomfortable because that makes you make rash decisions. So therefore, we would argue that you want to stay close to home and move up in credit. You want to be in higher credit quality than lower credit quality at this stage of the cycle.
Ashley, thanks very much for all of your time today. It sounds like Gryphon's made some fantastic headway in the short time you've been listed. All the best with it.
Thank you, Danielle.